This Kombucha is good. How's it going, guys? How is every little thing? Today, we are looking at market close. We're looking at market close, and we have a couple of things we want to cover here. We got GameStop pushing above 200. It was actually looking pretty nice at 220 high, but we are here to support it again to get that back up to 220. Just bouncing around right now at between this 219 and 206 levels of resistance and support over here. We have AMC right here hovering right between 13 and 12. How's it going, you guys? We are looking at Alex Matheson Wilson. We got Callie Daza. We got Marlon Keller. We got Andrew P52. All of y'all, we are 15 minutes away from Power Hour. 15 minutes away until the markets start to go wild, and then an hour and 15 minutes away until they close. What was that? Oh man, I'm hearing things. We are going to first of all focus up on the video that we mentioned in the previous live stream. I mentioned that there is this video right here. There are institutional traders behind GameStop frenzy, former SEC regulator. That's right. This is the video with the SEC regulator talking about her predicted date when things are about to go crazy. Let's take a look. It's only 4 minutes, and then we're going to wait until everyone else shows up to really start the clock. Boom.
So there's a lot of confusion as to what's behind the GameStop surge this week. Can you give us your take and whether or not you see any problems here?
Thank you for having me on the show today, Leslie. And yes, the key point here really is the timing. So if you look at what happened back in January, it was the last trading week of the month when the activity first occurred and the short squeeze was on. Now we are in February. It is, again, the last trading week of the month. I believe that is no coincidence, because what do institutional money managers and funds do at month end? They report performance. So right now, these entities are looking to cut their performance figures for month end. So in my opinion, there are institutional players behind this. They are the ones that are truly driving this trade in order to pump up performance at month end so they look good.
How easy is that to do, and is that illegal in and of itself? If you take a relatively illiquid stock with relatively high short interest, although in GameStop it's come down quite significantly, the lowest it's been in years, does that count as manipulation?
I think it can, and right now that is what the regulators are looking at. So now we have a pattern that we are seeing. We have 2 months of this. We definitely have an interesting timeline to look at. I don't think the February trade will be as successful as the January trade, because there are two things working against it. And number one is that the shorts are pretty much out. So the short squeeze is not there really as part of the equation now.
So we wanted to make it very clear that this was back in the reason why people don't cover it for some reason. February 26th. So this is the end of the 26th. A SEC regulator is talking directly to CNBC, and when she says that the shorts are out, unless the chat disagrees, this is when the amount of shares left too short was running low. And right now we are going to cover this because someone just threw an amazing super chat in the message covering exactly what this SEC regulator has to say. So focus up, because she is trying to say something about how March 19th is maybe not the quite date that makes the perfect sense. It actually might be month end. After this 2-minute conversation, we are going to unpack it.
And February is a short month, and the last 2 trading days of the month are on the weekend, so no trading. So they'll have difficulty getting it to where they want it this month. I think next month will be a huge month for this trade if it continues, because then we're dealing with not just the month end, but we're dealing with the quarter end. So everyone reports performance to their clients at quarter end. So if this is the case, if what I say is correct, we're going to see this trade really pop in March. And the regulators are looking into this, and they're going to catch on real quick.
Right. I guess it's a fascinating thesis, Amy. I guess the question would be, to what degree do the market's nerve endings for all of this commentary get deadened over time and just get calloused over the bouts of volatility? And then for regulators, you know, Leslie's point a moment ago was about how algorithms are trying to read this commentary. For the regulators, how can they possibly connote intent, given the fact that a lot of these references are so oblique?
Well, that's true. I think they have to use what means they have available to them to do their investigation and their analysis. And no one has the magic key for how to interpret an emoji or a picture tweet. So they have to go back to their old-fashioned analysis and look at the trading data. Who are the counterparties involved in these trades, especially looking at trading activity close to the close, because that's another indication that these are professionals that are coming in, you know, close to 4 p.m., banging the close, as they say, trying to pop it up at that point in time. So that would be a good indication if they're looking at the trading, the counterparties that are in the trade at that point in time at month end. They're going to get some good insight into perhaps who is behind this.
Okay.
Shepard Smith here.
Who is behind this? Thank you, Shep. We are looking at, hold on, let's get the right one here, not this one. There we go. We are looking at some pretty solid underreported news back in February. So this is all the way back. A SEC regulator is literally telling us, look at market close to close. Make sure to look at how the momentum is working. She didn't think that February was going to be as crazy of a month as January. Of course, she is calling it at the end of February, so that obviously makes sense. But this is an important note. She didn't think that February was going to be the month. She thought that March was going to be the month, specifically at month's end, when it's also the quarter's end and everybody needs to report. So right now, quarter end is not March 19th, it is actually the 26th. So that's why we are looking at a different date entirely when it comes down to when this SEC regulator thinks that the squeeze is going to squoze. Let me see what you guys are saying here. Place to remove, blah, blah, blah. Okay. Apes together strong. Come on, guys. Only 136. They're talking about the like counter. Yeah, get that like counter up here, guys. 1,500 people, 136 likes. That math doesn't check out. Great Vibe says, and together, all of the fish chanted Dory's motto, just keep swimming, until the net finally snapped and all the fish swam free. Just keep swimming. So, in terms of just keep swimming, GameStop once again got supported one more time with a bounce off of 205. It's as if we told the story of GameStop from the beginning of time. When we saw this pretty alarming dip underneath 205, we stayed below 200 almost the entire day. However, when we were supported by it, seems like we are not going to be able to break out of this band. So staying below 205 is not an option, and staying above 220 also does not seem to be an option. Those are currently the daily resistance bands that are preparing to have us either stay below 220 or stay above 205, and let's see if a little bit more volume when power hour hits changes that narrative. Over here on AMC, however, we already have 120 million, and that said, this is a lot less than what we had yesterday. And AMC is looking at the last hour maybe as a way to show exactly how much volume AMC can really pour into the system. Usually we saw about 100 million on a day-to-day basis. AMC usually has more or less twice as much volume as GameStop. However, yesterday GameStop's volume was pitiful, 20 million on the day, which means there is a lot more going on behind the table. Behind the curtain. We have no clue exactly what happened. Of course, if you guys watched that new video of explaining step by step what happened to GameStop's price yesterday that I just put out right before this live stream started, you guys would have seen that GameStop right now is sitting at 32 million volume, right? That is already 50% more than 50% on top of yesterday's 20 million volume. So this is too legit to quit, honestly. People are asking about what is the next level of support after 205, and the one that I have tracked is 180. Now that is a number that GameStop had been supported by yesterday, had been a solid level of support, and had a very difficult time passing below that number. So GameStop is having these $20 bands, and right now $20 bands. Well, we better prepare a couple more rubber bands because we are getting ready for a big move yet tomorrow. Now, if you guys have not yet seen this morning's live stream, we talked about how there is going to be already a roster ready for the number of people that are showing up to the congressional hearing tomorrow, and that's going to be pretty big. Thank you, Jerry Morris, for the super. Is it better for us to sign up through Patreon or YouTube? I like Patreon as I believe your cut is higher. Yes, Patreon is better. If you guys have not yet joined the ranks of the officer army on Patreon, that is very, very appreciated if you guys go and use the pinned link in the live chat or down the description. And now we are going to start off the how many more minutes until power hour? 5 more minutes until power hour. Got some tasty lunch from Hector, best friend and roommate. Thank you so much. We also got some, what is this, curd? That's delicious. Real Mr. Miggs, what's going on, man? Bro, remember you saying last week, get ready for a roller coaster. All in. Scissors in the chat. Let's get some scissors for my boy, Mr. Miggs. We are here to ride this roller coaster either to moon or bust. Moon or bust right now. Lambos or ramen noodles as Coaster Hot, what is his name? Coast Hot Dog Coast says. Now that said, we are going to focus up a little bit on any amount of news that you guys care about. We did just look at the 4-minute clip from CNBC with a SEC regulator. Really important to be able to focus up on the fact that she does not seem bullish on the March 19th date. She is much more bullish on price action when the entire quarter is over, right? When Q1 is over, the end of March. This is in line with what Renzo was saying. That Renzo believes that starting from today, actually from yesterday, something from yesterday, the 15th, to the end of the week, end of March is likely going to be when this squeeze happens, according to him, when he was on the show last Friday. Okay, 1 second. Let me get a new ice pack real quick. This computer gets hot. Hot. Oh man. You guys will have likely noticed, if you guys were part of the morning live stream, that Professor Meatball is back. He went to the vet yesterday. I wasn't sure if I was going to reveal this kind of stuff, but I was kind of put on the spot. People were wondering if I was feeling sad because GME was performing poorly yesterday, and no, I was excited for that flash sale. But the most important thing about what you guys need to know is Meatball is healthy. He does have to go to surgery on Thursday, which is the reason why, if you look down the description, you'll find details about the charity live stream that we're going to hold on the Quadruple Witching Day. Quadruple Witching Day is this Friday. Expect a ton of volume. Expect a ton of HODLmen, the 4 HODLmen of the APE-Pocalypse, to come on and ride through, and maybe expect some today as well. So, DFV admits that he is indeed a cat? What? Hold on. Seriously? Did he actually admit to being a cat? Darn. We are now going to focus up a little bit on how AMC's price action has been tracking today. Now, ideally, I don't have the computer run so hot. Doesn't run too hot at all, actually. Very annoying. We have some SEC FTD data for the second half of February, part 3, that I want you guys to focus on. And welcome to the bank of GameStop. That's a fun DD as well. So we're going to focus up on some DD. We're going to focus up on some price action. As you notice here, there is this this small wave, and then another wave, and then another wave. This trimodal action that is happening here is AMC trying to break through this 13 resistance and support here. It seems to have been rejected twice at $13.20-ish cents or 30-ish cents, and then finally was rejected at a higher level of resistance above at $13.34. So one of the things that we are looking at in terms of AMC here is whether or not it will return back to its heights of $14 that it closed at the day before. If we zoom out a tiny bit, we'll be able to note when the MACD crosses over the signal line, such as right here, when the MACD, the moving average convergence divergence line, crosses over that signal line, we see a breakout from $12 and I would say like 90-ish cents. This is exactly where we would have seen major tendies of around 30 cents growth, and then when that MACD line crosses and crisscrosses between that signal line is where we would have been bearish and would have tried to either pull out or prepare for a wild ride as we rocked back and forth. When that MACD line has a coordination with other indicators such as relative strength index, RSI, which is this teal line right here, we'll be able to assume a little bit more about exactly the actual bearish and bullish momentum. Chief C, what's going on? Is it true that Meatball is a shill sponsored by Citadel Securities? Not at all. Unless Meatball, is this something you're trying to hide from me? I'm keeping my eye on you, Meatball. No, I'm just joking around. Meatball's a dog. He is a professor from the University of Cornell, though, so don't get me wrong. He is brilliant. He is a beautiful, brilliant dog. And now, let us see where AMC started. So it started off the day trending in the pre-market, just pushing up against that support level at $13, right? It was trending a lot higher. It was roughly around the $14 mark right before a couple of hours directly prior to market open. I want to know why my WeBull is so slow right now. So I'm going to focus up on my face. I'm going to restart WeBull. If you guys aren't aware, that is the trading app that I use. So go ahead, make my day. Get that WeBull downloaded, and we have just started Power Hour. Welcome, ladies and gentlemen, boys and girls, to the final hour of market open today, and it is going to be a wild ride, guaranteed. I'm going to pull up the markets again. You'll be able to see just a little bit about what I am talking about here. We got AMC on the left, GME on the right. In just a second, there we go. So AMC and GME, whoa. Am I the only one seeing that? Okay, whoa. The hedgies, are they trying to hack me right now? Whoopie doopie. Well, hopefully this is just a momentary glitch, because I would rather look at something that isn't shining back and forth. Bring on the Power Hour. Come on, bring on the tendies. So if you guys want your dog to be featured in the end of Power Hour, right? We're gonna start picking up some good boys and girls, and hopefully, if you guys think that your good boy or girl deserves to be in Power Hour, then go ahead and send that to me on Andrew Mo Money at Instagram. Andrew Mo Money on Instagram. Okay, now I think we're all good. Whew, that was scary. Thank you. That's some rice too. Baby rice. AMC did hit a daily high of $13.61 just a couple of hours ago. Jamin Blue, what's going on? You see Roaring Kitty's new YouTube video 25 minutes ago. It's been a minute. Great job with DD. Ooh, new YouTube video. Thank you, Jamin Blue. I appreciate that greatly. Did he tweet it? Or does he have, might not subscribe to Roaring Kitty. Oh, no. Oh, let's see. We got those scissors in the chat. Let's get going. It's called Power Hour, says Anthony Swindle. I agree. Power Hour indeed. Oh, what's up, Marcus? Nicole Ray? That is the God Pill. Hey, Andrew, it's the God Pill. Just watched your clip of our conversation. You the man. Hey, if you haven't seen the God Pill, that is an interesting PSA about GME options and how it means to gamble and win, and sometimes gamble and not win. So be careful, because it is gambling. Both Trey and I agree. Options are risky, but the God Pill has an opinion of his own, and if you wanted to go ahead and check it out, that's the clip of the video that I just posted. So AMC, GME, my chart's a lot more responsive now. That's fantastic. Let us look down at $12.50. That is the lowest point that AMC got today. we are not that far off. We are roughly at $12.90, right? That is above this $12.66. Honestly, the range of AMC isn't that crazy compared to how AMC could have been performing. If you conclude all of pre-market though, then AMC has been wildly ranging from somewhere high above $14 in the pre-market, and then now all the way down to $12.34. Oh, the low is 1, 2, 3, 4. Does that mean something? 2,100 of you, come on, let's go smash that like button. Good morning, says Brandon, my fellow children investors. If we hit 3K likes, he actually has updated his request here. Hold on, let me get rid of this screen. He says get 5,500 likes, and then he said the offer still stands, but now 5,500 likes, and he will buy the dip for another 3,000 in GME. I am following on that trail. You guys like, you guys subscribe, and I am gonna buy another $1,000 at GME at 60,000 subscribers. Come on, let's get that bread. DFV posted some video. Did you already see? I don't have 25 minutes to sit through his video, unless that is exactly what you guys want. If you guys want us to just sit through a little bit of DFV's video and talk about it, then go ahead and let me know with some cats in the chat. If you guys just want to cover what Roaring Kitty did, put some cats in the chat. Oh, he has 500,000 subs. Wow. So this is oh, this is only a minute, 2 minutes long.
What do you?
Okay, I think this is gonna be. Oh, this is an Eminem video. I don't think I can show it because of Eminem. Very sad, but we do have some DD here. SEC FTD's data for the second half of February, part 3. I am now subscribed to Roaring Kitty though, so if you guys have not checked him out yet, that's pretty cool. Very cool that he has an actual YouTube channel here. So SEC failed to deliver data for the second half of February, part 3. New FTD data is for the second half of Feb is hot off the press, right? So I'm gonna actually add this DD to the description so you guys can check it out yourselves. I know that some of you are here shouting out cats, but unfortunately, some other people are here specifically to look at DD. So here's what I'll do. I'm going to, here is Roaring Kitty's YouTube channel. What I'm going to do is I'm going to put this video in the description. Okay, so DFV video. It's just going to be an Eminem parody, so that's why I'm very cautious to show it. And then I'm going to show new FTD data. There you go. Thank you guys for those cats, though. Alexandros Makridis, what are the hedges playing with? Why are the hedges playing with our emotions? So true. What are you doing? Well, once again, we know that this might not be the short hedgies, that actually might be the long hedgies, the long whales, institutions that are trying to make a fast buck by dropping the price of GME and then catching with a bunch of long positions and with call options so that they can scoop up some tasty tendies on the way up. But yes, if anybody wants to see it, it is in the description below, but make sure to watch it either together with this live stream or later after this live stream. Okay, so we are looking at GameStop now. We have a couple of indicators to tell us exactly, you know, the normal technical analyses that GameStop does, and that isn't necessarily applicable to GameStop and AMC because they are working on two major differences. One, the call chain, the option chain that dictates how many options there are left in the snowball that is to roll down the road. If you guys did not hear about that snowball analogy yet, go and check out that video. But now GameStop currently has a couple of indicators that I do want you guys to take note of. We have the VWAP here, gives us a volumetric view of how the price is fluctuating, and the VWAP is oftentimes a good indicator of where the price should actually be depending on the volume. Volume drives the price some of the times, but sometimes it doesn't, and when it diverges from the actual price, it usually finds a readjustment and a correction down to the VWAP for a normal stock, right? GameStop might not be a normal stock. We also have this purple line. This is the exponential moving average, the 200-day exponential moving average to be exact, and that is, ladies and gentlemen, a macro indicator of the momentum of the stock. One of the things that you can also notice down here is that we have the moving average, convergence, and divergence, which uses two different types of exponential moving averages. I believe the 9-day and then the 16-day. Or the 20-day, and they take the difference between the two and it allows us to have one orange line that tells us exactly when it would be a bullish move to buy the stock. So right here, the orange line crosses over the blue line. It's kind of hard to see, but right there would have been a time to buy GameStop, and if you bought here at 205, you would have been all the way to 220. So the MACD doesn't tell you exactly how high the stock will go, but you can always track it until the two lines intersect again, which would be one indicator that it might be a good time to sell. David Cox, how's it going? Millions of dollars in 185 puts for 319 bought today. Can I send you the file? Wow, you can send it at angelmobusiness@gmail.com, but I'm trying to be wary of people sending not super business related emails to that business email. Okay, so the same thing for AMC over here. We have multiple lines of resistance and support. If you guys aren't quite aware of exactly what these teal lines, horizontal lines that I've drawn are, well, these lines are telling us places where the stock has either been rejected by a certain price. So let's say that it is rejected here at at $13.13. Right here early on in the day in AMC, and then it was rejected again later on. This is a line that I drew, like not today, like a couple days ago. So this means that this line that I drew is an easy way to be able to tell where AMC is going to either have trouble and struggle as they try and accrue value higher than that price, and where we can find that a price will be supported at. The reason for why this is, really briefly, is that the same population, the macro population of people buying and selling AMC and GME, are roughly the same day to day, even week to week. Sometimes some retail investors come in, sometimes some retail investors go out, but more often than not, people have drawn these exact same lines just like you and me, and that is why these lines are so reliable, because it shows exactly where they had to ask the question, oh, is it currently worth $13? Every time it gets closer to $13, they have to ask the question, well, last time we were rejected at 13, so why won't we be rejected this time? Past resistances can become support, where you can see this actually in the day of AMC. We saw here that this price was trying to be supported at $13 at the beginning of the day. It was bouncing off once or twice and then fell all the way through, and then was a new level of resistance. That new level of resistance dropped low and then had another level of resistance at 1272. This quickly became a level of support, even though it was rejected at 1272 and served as resistance before it moved onward to become support. You see, these lines are incredibly important because they help us understand pivots and make us doubt whether or not it will take one side or another. Okay. People are asking me to look at GME. GME is a very, very similar situation. If you guys are excited, we are going to try and get the Four HODLmen together later today, likely after the bell, because Trey is going bell to bell. Have him on a group chat right now. HODLmen, we're like little besties. It's kind of cute. We are focusing on AMC right now, seeing if it can actually rise above this $13 resistance and stay green for the day. It is 7% away from going back to break even on market close. GameStop is even closer, just 5% away to being able to close at break even. Power hour, baby. This is the way. It says, I'm still holding, can't let these go. My mind won't let me sell. I don't understand that word at all. All I know is hold, buy, hold, dip, buy, and hold. Those are pretty good numbers. Let's see. Yo, Andrew, you're the man. Oh, thank you. That means a lot. Not a lot of power this hour, I guess. Yeah, sometimes it really ends up being a lot of action at the very end of power hour. One of the things is that you can keep your eye on the very last metric down here. This indicator is volume. Volume is king when it comes to moving volatility, and momentum is entirely based around volume. Right now, they're not, for AMC, we're not even seeing any higher minutes than like 200,000. 200,000 minutes, pretty lackluster. Even the highest before power hour was only at like 500,000. 500,000 trades in volume per minute, and GME is not doing much better. Sebastian Edlund, how's it going? Search comprehensive DD from Not a Financial Advisor Discord by Gafgarian on Reddit. Could explain the end of March. Ooh, I will search that. Thank you, Sebastian. Comprehensive DD from Gafgarian. Okay, Gafgarian and then Reddit. If there's any way that someone can send me this, because Google is not giving it up. Because I'm not on the Not a Financial Advisor Discord, so that's the problem. On Reddit. Okay, maybe I'll just search this entirely on Reddit. Comprehensive DD from Not a Financial Advisor. Reddit. Thank you for that super. And then Jen Zink says, I sent you a picture of my dog Lewis from Jeff Krieger 81. Okay, and a message about manipulation in the market. Help Lewis get his Lambo. Okay, let's get Lewis into his Lambo, either Lewis or Louis. Okay, so I tried to find comprehensive DD from Not a Financial Advisor. Oh, found it. Wow, that wasn't that hard. Sweet. So it seems like it's actually in a Google Doc. Okay, that's kind of cool. Wow. This is long. This looks like a pitch deck. Very interesting. Okay. I am gonna also look at the same time at Jeff Krieger. You guys excited? You pumped? Every day power hour is a good day. Every day is a good day when there's stonks to buy and people to learn from. Jeff Krieger 81. I'm gonna pull up your dog in just a second. Trey is Moses and he's gonna part the Red Seas of dips and let pass up to the uprise. I love that. Okay. Jeff Krieger 81, there you are. Look at my doggo picture in the photo above. 2, is it true that only hedges can trade to the 4th decimal place in the market? Retail traders definitely cannot. So that is one of the not even that conspiratorial conspiracies out there. So what I'm going to do is I'm going to have this side by side with your doggo. Oh, Jeff, can you send Lewis as attachment? Don't send it as a disappearing file, you guys. I kind of hate disappearing files, honestly. Okay, so we got GME. Let's look at what this does. That's not bad. Okay, what I'm gonna do is I'm gonna duplicate. Then I'm gonna screen. So this is the comprehensive due diligence for ethical rationale. Okay, that's kind of interesting. So GameStop, the great last squeeze, and how unrelenting greed may send us all to the moon. Okay, a little weird, but I suppose we have the ability to go through it. Roberto Gonzalez says, we W the Oracle of the GME Matrix. Now, that's what I like to hear. That's what I like. That's the sound of you guys smashing that like button. That's the sound I like to hear. All right, the ethical rationale behind carefully constructed due diligence. The legal stuff. Blah, blah, blah. They're not financial advisors. All right, get it through your heads. Let's finish that. Why are we here? Why are these charts so small is a better question. Can't see anything. Okay, I'm assuming that everyone reading this is aware of basic concepts around short selling, but in case you need to brush up, this last slide of the presentation contains various links to education, blah, blah, blah. Okay, so a standard short selling model. That's very hard to see. Oh man. So this is how a short selling model works. Actually, it's kind of, if you guys are visual learners, this might be helpful. So the broker sells the short seller, and then this is actually just very difficult to read here. But then the bankruptcy jackpot is you short the sale until the company goes bankrupt, and then you don't have to pay any money, any taxes or anything else on your crazy income. So why GameStop? This is honestly very difficult to read. It's just too small. So what I'm going to do is I'm just also going to put this in the description, and you guys can read it. Feel free to comprehensive DD on GME. There you go. Makes my job easier when I can just say, look at the description later. Oh man. Krazer says, I sold at the dip today thinking it was all over, but now price is higher. Should I buy back? Help! Uh-oh, you sold at the dip. Now your taxes are, your tax benefits are belong to me. No, just kidding. That's a reference to, I think all your base are belong to us. The truth of the matter is, if you were afraid and you sold earlier, what's to stop you from being afraid and selling later, right? That's the truth. That's why we get scissors in the chat. If you think you're going to jump on this time, be sure that this is money you're not afraid to lose. Because when I drop another $1,000 for getting 60,000 subscribers, that's money that I'm not afraid to lose at all. Okay. True apes hold. Yeah, some of you are making it clear you guys are true apes over here. We are looking at the price basically fluctuate non-stop between these two barriers, not seeming like it is making a breakout yet for GME side, and not looking like it's going to break out on AMC side either. Which is a pain. I think people are starting to be like, what do we do here? Oh, Ivan, thank you for the super. Comparing with the January squeeze in GME now, is this following a downward trend? Do you think GME still has potential? Yeah. Why do people keep thinking that GME is done? Not even close. In my opinion, not financial advice. GME looks healthy as a horse. It looks like a nice healthy dip. And I cannot wait to buy more tendies. Getting these tendies right now, right here. That's what we're doing. I've been told not to speak with food in my mouth. So, welcome to the Bank of GameStop. I spent a considerable amount of time looking through the ETFs and looking at their institutional holdings, pro FinTel data, and any other pro membership they can get into. By comparing charts on Flow Trade, looking at time today, they saw a downturn. This is 13 hours ago. Downturn in the big banks in the morning to midday, and small recovery at the end of day. ETF exposure. This is some data from the ETFs that we covered earlier. Some apparently some pro data. So you're looking at some real trouble that this person is going to get into if this is actually pro data, because they're not supposed to show it to people. Rex Perth. What is this selling you guys are talking about? My broker only has one button. It's buy, and another button that says buy more. Exactly. What you drinking? This is a kombucha. Kombucha. It's like functional alcoholism. 4 hours ago, literally a guy buying one stock per one upvote. Ooh, man, this guy's buying a ton of stonks. Okay, the dip today was due to ETF lending, so we already watched that. Remember the 19th is not the last possible day to the squeeze. It was an honor to hold with you into the green. If you ask yourself what's going on, GME is being shorted through XRT. When you learned that Citadel someone needs to buy 600 million, smells like broken here. Okay, so let's look at this one. Okay, so do I need to raise my voice? I'm talking so loudly already. 1 day chart equals giant cup in hand. Oh baby. Now, how far can I zoom out? My charts are not zooming out. I love my computer. I'm getting a new computer soon. So we are looking at, if you ask yourself what's going on, at GME is being shorted through XRT. We have the ETF XRT on the left here and GameStop on the right. See any difference? We've been talking about XRT being a vehicle to hide GameStop as an ETF for a very long time. So this is pretty darning evidence. Not only XRT, of course, we have a whole spreadsheet. That person came on this the live chat last week. Sorry, no, yesterday. He came on the live stream yesterday to talk about the different ETFs that contain GME, and that is very cool. Got to talk to him, and he shared his spreadsheet through the live chat, and we've added that to the description. Want to check out the S3 tweet about GME? Eeyore Dusinuski 1 hour ago. Okay, one sec. Eeyore Dusinuski. Eeyore. One hour ago. AMC short interest is 651 million, 46 million shares shorted, 10% float, 9.5% of S3 SI percent float, 3% fee, shares shorted down 18 million shares worth 253 million. Is this legal? Can this S3 man just tweet at us whenever there's information? Are Stark earnings reported in earnings report or no? Chat, get at him. Let him know. Your Dusanovsky, GME short interest is 1.89 billion with a big 1B. 8 million shares shorted, 15% of float, 13% S3 SI percent of float, 1% fee. Shares shorted down another 5 million shares worth 1 billion. A little sus. Down 5 million. Okay, so GME is going down 5 million. It says that AMC shares shorted down 18 million. Shorts are down 600 million, and this says shorts are down 6 billion. What do we think about Eeyore, guys? 3,000 of you. What's going on, guys? We're just having some fun. 30 minutes until the power hour is over. And we are making it clear that GameStop, you don't have to go anywhere. People keep saying that something has to happen this week, and that is just going to poison the well in terms of expectations. That's why we have all of the DD that we covered this morning. They're turning into clips as we speak. A bunch of you have already watched those clips, so that's why we are going to focus up and learn as much as we can. We are good boys and girls, and the Tendy Man will come. Dupes Dupes Master Plus says, by the way, if you're expecting a stimmy and you have money in the bank already, you might want to start the transfer now. Ooh, yeah, good point. There's going to be some clearing time. Let's see. Gabriel Cabrera says, when I first started watching you, I found your speech cadence odd, but now it's one of the most comforting voices on YouTube. Thank you for everything you do. Good luck on Thursday, Meatball. Thank you so much, Gabriel. That's really nice of you to say. Oh, man. The DFV video is pretty good. I wish I could see it. Guys, it's a bumpy road. We are battling hedge funds costing them billions. Did you think it was going to be stress-free? Zach Barrett? That's making a good point. Okay. Eeyore is a fraud. People don't like Eeyore. Vinay Papat, keep up the good work, man. We appreciate that Mr. Rogers of our generation. Stonk you very much. I love that. That's a very nice, I'm gonna save that for next time. It's a very, very nice little message there. That's all I want is to be the Mr. Rogers of Stonk. Not a dead cat. What's up, Mo Money? Give that stonky, says Christopher Ketzel. Yeah, I agree. We're gonna get that stonky here. So we have awarded you, explained to you, given you the ability to understand exactly why that dip happened. That video was just released on the channel right before this live stream. And we love Meatball, someone says. Aw, Meatball. We have so many people here who support you. Here, I'll give Meatball a treat. I'll give Meatball a treat, but you guys gotta put some scissors in the chat because this is how we do it, guys. This is how we like that stonk. Oh, how will the stock go? Says Bart Vanderdude. My prediction is easy 2000. So people are saying 2000 is the new stock prediction for AMC, right? 2008-01. Honestly, that is I haven't seen any DD that supports it rationally, but like I said, like Renzel said when he came on the show, it is very clear that sometimes all you need is enough demand and limited supply. And those of you who are holding this stonk with your hands and just gripping it tight, it could be worth a ton in the future. That's just how supply and demand works. You're the movie theater now. Michael Rake, I agree, you're comforting during this madness. You guys are making me feel all types of feelings. Yeah, it's a troubling times, but you guys are seeing me nice and confident. Not a problem, y'all. Not a problem. Be careful of all of the spam chains in the comments. It's difficult to get rid of them all. So if you see one, if it's like a thread with more than 30 comments, that is a spam chain. Do not engage with the people in that spam chain. Okay, let's see. Oh yeah, Treyon had a guy on his show a few days ago that did DD on 2000 AMC. I do want to be able to see that. I want to be able to see that DD because honestly, very, very interesting, but at the same time, like, kind of sus. Kind of sus, but I would like to be able to believe it. I would love to be able to believe it. Hi, says Magnus Tofty Cruz. What's going on? Oh, love your hair, Dean. Thank you, man. I appreciate that. 2K, 2K, 2K. Question. There were 1.5 million ETFs borrowed this morning. Was the dip this morning through that, or is something to come? So, the ETFs is one of the best ways to be able to hide the fact that these shorts are still continuing to be shorted, and one of the things that we want to focus on is the spreadsheet of those ETFs. So if you guys have not seen that yet, that was in the description of the live stream from yesterday. So go ahead and check that out. Huge green spike. Well, yeah, this is pretty solid, I would say. Can we move a little bit, please? Move just a tiny bit. Just a little bit, please. This is why I never upgrade WeBull. Can I please move? Turn off auto. This might do it. Okay, one sec. Hold on. Give me a hot second. Okay. Did you read the DD about Elliott wave theory? Ooh, what is that? Elliott wave theory. Elliott wave theory. Have you guys seen the Elliott wave theory yet? Bill Doc, what's going on? Hedgies are also waiting for you to get your stim check too. Yeah, be careful. We got some scissors. We got some bones in the chat. We like that. Elliott wave theory by Investopedia. What is Elliott wave theory? It's a method of technical analysis that looks for recurrent long-term price patterns. Okay, guys, give me a hot sec. Look at this. The Elliott wave theory is looking for recurrent long-term price patterns related to persistent changes in investor sentiment and psychology. The theory identifies waves that The theory identifies waves identified as impulse waves that set up the pattern and corrective waves that oppose a larger trend. Each set of waves is itself nested within a larger set of waves that adhere to the same impulse corrective pattern, described as a fractal approach to investing. Ah, these are fractals. Okay. Well, if you guys were curious about simulating with fractals, then a new partnership on this channel called Trade Ideas, in the description down below, you should be able to play around with fractals down below. It's pretty interesting. We got Sanguine asking, Tesla value never went down, dip will recover. So let's look. Tesla really didn't change much in its actual company valuation during this whole tumultuous time. Give Tesla our spot down here. Tesla's already at 680, also close to 690. That'd be a very fun level of support and resistance. Right now, it does look like 680 is the level it's been bouncing off multiple times here. I'm going to actually add that as a level of support. If it does get supported here, then it's going to be on its way back up. Right there. Boom. Easy peasy. Too easy, like Trey would say. Oh, okay. So Bodine says the post is called "Why 10,000 per share is just a stop along the way." That's a very cool idea. Why 10,000 a share is just a stop along the way. I'm looking for that article right now. Kyle Pulford, thank you for the super. I appreciate that. Hey Andrew Meatball, love the work that you're doing. Can you give the different and on the different perspectives, can you give some non-financial advice on Roblox? Sure. Tesla was just in our special corner right now. It doesn't seem like there is a ton of action with AMC and GME, although we are closing in at the end of power hour. It is already 12:37. So with Roblox, we are noticing some pretty let's see, some pretty sideways trading, to be honest. It's been trading sideways this entire time. So in that sense, in terms of momentum trading, there actually isn't a lot to explain here. Has seemingly a pretty solid floor. Has tried to dip below 66 before, did not get lower than 66. Has basically been trading at this lower floor of 68, and now has the risk reward potential of rising back up to $90, which it was able to do in after hours. I would say that the risk reward ratio looks good for Roblox, but as of right now, it's anyone's guess to why it's trading sideways so long. Let's see. Oh, Bill Gross made 10 million betting against GameStop. That's gross. Makes sense that his name is Gross. Let's read that article real quick. What's up, WallStreetBets? Let's see. Raise your volume, please. I'm trying to just yell, you know. But this is as loud as it gets. Hold on, let me see. Is that louder? Is that louder? Is this louder? Nope. See, this is as loud as it gets. Okay, so we're going to now 3,000 of you smashing that like button. Let's get this up to 1,500 likes. 1,500 likes, guys, and 60,000 subs. That is the goal. Bill Gross says that he made $10 million betting against GameStop. Let's see how gross this man really is for betting against GameStop. Bloomberg. Okay, here we go. Noah Riemann, how's it going? What's up with MoviePass? Never sold my 10,000 shares at what is that? 2/200ths of a cent. Almost 1 billion volume today. MoviePass, rough, man, very rough. Cool idea, but it honestly had a rough, rocky start and ending. If you guys haven't seen that, pretty funny. There's a pretty funny parody of MoviePass CEO. He'll do anything for you to watch a movie right now. Andrew March, hey, can't post on Reddit due to low karma, but sent you a spicy meme on Instagram. Want all the apes to see. Thanks for all you're doing. Love the content. Sure. Look at your spicy meme. Hopefully you just sent it, because otherwise I have no idea which Andrew March you are. Say it with your chest. So 20 minutes until the end of Power Hour. We got Jeff Krieger's dog that I'm going to show in just a second. And then we are going to look at Andrew March's meme. Perfect Snake 69. Aw, that's a cool name. Thank you for the super chat. Audio super low. Oh, it must be the noise canceling. One sec. Is that easy? Is that better? Is that better? Meh? Maybe my energy level is just not that high. Like, guys, come on, we gotta get pumped up right now. Oh, Marshmallow, I got you. Okay. So this is a Emperor's New Groove meme. You like that? Let's look at it again. So it's GME starts to dip. Don't tell me we're about to see a 40% dip. Hedge fund manipulation. Oh yeah. Bring it on. Oh yeah. Awesome. Okay, so thank you for sending me your meme. And now let us go into this article. So, oh wait, not this article. This one. Bill. What is Bill doing with making money betting against GameStop? Right now, GameStop is currently above $200. That is good for the day, honestly. It's good for the day. That's what we like to see. It wasn't just retail traders who cashed in big during the GameStop core stock mania. A legendary billionaire investor made minor killing shorting the shares. Bill Gross, the erstwhile bond king and co-founder of Pacific Investment Management Co., said in an interview Tuesday on Bloomberg Television that he made about $10 million betting against the video game retailers' shares, right? Look at that. But the trade didn't go off without a hitch. I got in too early, said Gross. I was in the hole by about $10 million, but he stuck with it to sell at a profit. GameStop stock for months among the most heavily shorted on the New York Stock Exchange surged more than 1,700%. Like, guys, today's might be a slow day, but at the very least, you guys know, cumulatively, between me, Matt, Trey, we are streaming to almost 25,000 of you that are interested in learning about this stock, right? We are here talking about the stock right now. So as a legion of Reddit users piled on, forcing bearish traders to scramble for shares and brokers to take the highly unusual step of curbing trading. Remember that? They went to the congressional floor to answer for that. Let's see. Eric Sutton says, "Hey Andrew, any thoughts? You get your thoughts on Rovio? Got in back in December 2020. Also, pretty sure Meatball needs a treat. Correct? Okay, so Roblox, you were in our bully seat for a second, and now we're gonna look at Rovio. We'll do a really quick, like 2-seconder on Rovio, and then give Meatball a treat. Every like goes to feed a hungry Meatball, guys. Let's get up to 1,000 likes here. Every like is appreciated. Let's see. So we have, wow, Rovio has been on a tear. Is that right? Is this the wrong stock? Because it's not the right ticker symbol. ROVI. There's 2 different kinds of stocks called Rovio. Honestly, I'm seeing the exponential moving average just fall, right? I'm looking at, there is not a lot of confidence in this stock, although it does seem like it has now since risen RSI to 93. I would say this is already a runaway stock. We have the moving average Convergence Divergence line pass over the signal line. It is still far above that signal line. However, it's anyone's guess as to how long that lasts. And you guys couldn't see any of that. So Rovio, there you go. Okay, as of right now, I think that this is a runaway stock, and I wouldn't try and get too deep into it unless you've already gone into it already. And that is not financial advice, of course. We got 15 minutes left in Power Hour. I'm getting my energy levels up. Come on, guys. Let's look at this billionaire who made a small fortune doing a bad thing against GameStop, shorting it. So let's look at this. Amid that mania, Gross took a shot to bet against the shares. I got in with options like a good Robinhood trader, I guess. He's not done yet. He's still selling call options at 250 and 300. I think this is a perfect opportunity for options sellers, not buyers, to take advantage. Gross was largely known for his bond bets after 4 decades at PIMCO, in which he built into one of the world's largest asset managers. For years, he generated industry-leading returns as manager of PIMCO Total Return Fund, and in 2013, the firm's assets approached $2 trillion. He was ousted through it, though, a year later after feuding with his PIMCO partners over strategy, succession, and managerial control. Oh, Baker Image says, check my link in the chat. Baker, I cannot look at your links. All of your links will be deleted. So if you try to send it to Instagram, that's an easier way to get to me. Let's see. Gross then joined Janus Henderson Group PLC as a money manager. This is how he made money, blah, blah, blah. Gross continues to comment on central bank policy and deficits and speculate in the bonds market with his personal fortune. He said that he was short coming into the Treasury sell-off in the recent weeks. Okay, so this is just his like approach to like buying stuff, and I guess that is the headline, that rich guy makes money because he's a rich guy. Makes money because he bet against GameStop. I think he'll be sorry soon. I think he'll be very sorry soon. Let's see. Did I see Roaring Kitty's tweet? Yep. Oh man. Roaring Kitty's tweet and his new video. I'm gonna have to watch it myself. It's gonna be the Eminem video, I think. And if you guys haven't seen it yet, it is in the description down below. All right, so we're looking at. Sorry about that. We're looking at GameStop right now at 2:12 right now, 13 minutes before the day is over. Another fresh cup of tea. Hector with the tea right now. Thank you so much. Jonathan says, I'm red all across the board. It's because today is a killing. It is a killer day for AMC and GME. It's really rough. But all across the board right now, you guys are seeing all red, right? Sundial down, Microvision down. We got, Cost is down. We got Kodak down. Eyes down. These are all really bad downs too. Like maybe it's the discount all of you are looking for, right? Everyone was looking for a discount. These are big numbers in terms of percentages down. Not looking good. Bitcoin, of course, is very down as well. If you guys are looking forward to getting your $250 of free Bitcoin, that's a good way to do it. Do I make my own kombucha? No, but I would love to. The sheer amount of sugar that goes into those things. Like, I would love to be able to control how much sugar actually goes into it. We have 3,200 of you waiting for Power Hour. After that, we're gonna meet up with the HODLmen and see if they're interested in coming on and talking about what happened today. Wanna come on now? We'll give you link. We have Matthew Bain says, my dog needs a knee surgery. Oh man, and I want Melvin to pay for it. GME to the moon. Yes, I also want Melvin to pay for these tendies. Roblox stonks. Yeah, that's right. Yeah, it's a major discount day right now. I think almost 900 likes in here. I like that a lot. Salad. This is currently a stock mukbang. We have seen almost no volume growth for the last 50 minutes of Power Hour, just 10 minutes longer. What I'm gonna do is set up for the HODLmen is I'm gonna start a Zoom call and see if the HODLmen want to join, then they can just jump on. I need some cheering up. Can you zoom into Meatball for a minute? Of course. Meatball, don't be so sad. Meatball, be happy. Wanna go for a run? Wanna go for a run? Wanna go? Wanna go for a run? Yeah? You wanna go for a run? Yeah. A run. Okay, there you go. I would like to go for a run. Okay, so what I'm going to do right now is I'm going to send an email out to the HODLmen to see if any of them want to jump on. Harry Lewington says, let's frame it this way. GME is in rough seas and some passengers are saying it's sinking while the destination is in sight and the boat is fine. Yes, that's right. That's a great way to put it, actually. Harry Lewington coming in with those top-notch analogies. We're about 9 minutes out from when the end of Power Hour. I'm gonna show Mr. what's his name's dog? Mr. Jeff Krieger's dog in just a second. Okay, so my computer is running the speed of an actual snail, but GameStop is also acting basically the exact same way. Let's see. We are going for a run though. Meatball and I go for a run every day, so we're gonna do a 5-miler. No, we'll do a 3-miler today. Keep it light. Keeping it light. Okay, so I'm going to send a email out. Tremaine, my man, Tremaine. What's up, Matthew Rappaport? Can you talk about how much money volume it takes to skyrocket or drop a stock in 5 minutes or less, as we've seen with GME? Sometimes it doesn't take any volume at all. Sometimes we have seen that even without volume, the stock can drop because there are some, you know, suspicious activities, some sus stuff that they can do. So with the last 5 minutes, I want to be able to see GameStop a little clearer. So I'm going to show my face real quick. And then I'm going to refresh WeBull. I don't think it's WeBull's problem, it's just that my computer's been running hot all day. Okay, so which of these is the right one here? The WeBull is refreshing, and we are going to, I'm assuming there's going to be there's a lag, which is why currently we're here. There we go. There we go. AMC, GME, and Rovio. Rovio, get out of here. We're looking at GME right now. Sweet. Alright, so this is the last 5 minutes of Power Hour. Hope you guys are getting excited. This is 100% what we are here to do. Just cross our fingers and really give the positive energy over to GameStop and friends. I'm going to try and... Alright, show a doggo. Jeff Krieger 81, showing your dog for the end of market. Okay, there you go, buddy. So cute. Alright, so the end of market 5 minutes before. Yeah, let's get this bread, you guys. We are working through it. Oh, I don't want to miss a super chat. D says, Dead Hunter says, can you check out BBBY has a high short interest and has been riding the wave with AMC and GME? Sure, we're gonna have BBBY in just a second, right after market closes. Matthew Rappaport says, how can GME hit 333 and 173 in a week time and now be at 212? Weird AF, yeah, just like as was predicted. Make sure that you are following the market closes, because when the closes have the volatility might happen like intraday, but the closes is where the real suspicious story actually lies. Okay, so GameStop looking like it has 35 million ending the day. It's actually pretty solid, almost twice as much as yesterday. And AMC, on the other hand, significantly less volume. However, it's just lacklusterly moving around, trying to flop. Maybe trying to see if it can push past that $13 mental barrier. Doesn't seem like it's going to be able to. I'm going to now grab the bell, get a little pumped up, put a little bit of what am I gonna put here? We got dollars here. Grab this, put that 20 in there. Come on, does this do it for you? Please, AMC up to $20 now. Come on now, let's get going. AMC still down 7.5%, just hovering at that $13 mark. Just not a ton of volume. We are looking at maybe 200,000 a minute. GME, on the other hand, is looking at less than 30 1,000 a minute, and we are looking at 3.5%. Honestly, pretty sideways. It's not that big of a dip compared to how it closed yesterday. 2 more minutes before market is closed. WeBull's looking at my feet over here. There you go, buddy. Whole market is red. It is one of those days, right? You can either treat it as a big old discount, or you can treat it as, you know, ooh boo hoo, oh my, everything that I know in the world, right, is down. It's just an unrealized loss, baby, unless you actually go and sell. And those of you who sell the dips, that's retail. That's stock trading 101. You learn not to do that in the very beginning. CB says, Hodl, looking forward to tomorrow. Yeah, I'm looking forward to the congressional hearing tomorrow. That's going to be live streamed right on this channel all day. One more minute until the day is over. Time just flies sometimes, really. Tim L says, thank you for the discount, Melvin. Yes, that's right. Robert Turner says, this is not from panic selling, not on the shoulders of retail investors. Correct. We're just sitting here, hands up, high as they go, waiting to hit this little bell here for the end of the market. And we are seeing just two small red candles at the end of the market, just dipping down, trying to push it all the way to the lowest part of that support level at the end of the day, seeing if we can fight against it. And AMC, on the other hand, seeing some small green candles trying to push against 312. Matthew says, I don't get why anyone would sell GME and AMC at this point. Very true. Why don't you put that money under the bell? Good idea. There. Got money, got bell. There we go. And with GME closed, now the markets are closed as well. Markets closed at GameStop is at 207.14, down 5.9%. This was a pretty lackluster day. Doesn't mean that the indicators don't have a story for us to tell in just a second. We have $207.14 for GameStop. That's down from a high of $220. That would have made us green for the day. Unfortunately, AMC has been nothing but red all day. Even a high of $13.61 wouldn't have cut it. We dropped from $14. What can we say? We dropped one whole dollar from $14 to $13, and now we are down 7%. It had a significantly less volume than yesterday, 124 million instead of like the hundreds of million that had last time. And GameStop had almost twice as much volume. I would say 75% more volume, because it was at 20 million the day before, and now it closed at 35 million in terms of volume. SM Forster says they want to get Wrench Capital on the stream. His technical analyses are amazing. Yeah, I'm happy to do something with Wrench. I think I am subscribed to him. I don't have enough time to watch through all of his technical analyses. So one, I'm going to do that today. I'm going to read a couple of his technical analyses, and then two, if he wants to, the HODLmen are here. Oh man, Sarah Graham. Loving the content. Thank you so much. I am trying to work through different dogs and cats. You know what, Sarah? If I can find yours somewhere here, we are going to be able to put it on for after hours. EW says half of my stocks are green, not red. Oh, interesting. 208.17 on Fidelity. That could be. WeBull might have stopped the price at just a slightly different. Yeah, this is after hours now. We are focusing up. The price can still fluctuate wildly. GameStop and AMC have in the past fluctuated pretty crazy, especially all throughout after hours. The population of people are different, and the volume is definitely going to be different as well. Philip Wallen says AMC's stimmies will change this red to green, very likely. The very beginning of those stimmies and their effect was likely already taken into account for the rise to $14 yesterday. So I need to send that email in case the boys want to get together. Boy, my computer is slow. Honestly, my computer is so slow right now that it might not work to try and run at the same time. So I will defer to them if they wanted to chat. That is up to them. So I'm going to go ahead and get out of there, and quadruple witching. Let's go. Yeah, that's the thing. Market closes at 4, so the market is completely closed now. Steph 40 Mobbin says, I'm losing hope, bro. Hey, this is 100% exactly what we called, right? There's not going to be enough catalyst this week until, at the very least, quadruple witching day, when all of those contracts expire in 4 different markets. So when that happens, we're likely going to see a pretty significant change in a lot of the markets as a ton of volume flies through. Let's see. Oh, daylight savings. Yeah, it's daylight savings right now. America ended the day early. We shorted an hour from ourselves. Let's see. I'm going to change my ice pack real quick. Seems like Matt just ended, so hey, if you guys are coming in from the moon game, go ahead and throw some scissors and packages in the chat to prove that you guys were here from Matt's moon game. So, what happened today? Well, a bunch of sideways movement. Basically exactly what we expected. Unfortunately, it's not what we wanted, but it is what we deserve. As of right now, we are seeing major institutional players essentially change the game up. There's a couple of ways that they can change the game up right now, and the long whales are the ones that we want to focus up on the most. Here's what I'm going to do. Let me get rid of Zoom because I think that's what's killing my stream right now. Okay, real quick. There we go. Let's see. All right, be nice to each other. Someone said, give us a sense of what is happening. Someone, if you guys are coming from Trey, what exactly did he say when he was here? What, did he say he's getting food and then coming back on? Someone let me know. Packages. Okay, so Javier Lopez is coming over. We got almost 4,000 people coming over. What's going on, guys? Let me change this. So right now my computer is running pretty darn slow. What can you do? Let's change the microvision. I'll grow Mavis here. We have GameStop dropping another 5% after hours. Woof, what the heck? Oh, the GME vid from Ranch is a must-watch. Encourages us to relax and zoom out. Yeah, as of right now, we are feeling pretty sideways, but honestly, look, GameStop is on a mad rip in the macro sense. Like, this is just not how a stock can perform. Name another stock that's performed up 1,700% since the beginning of this year. Basically impossible. Trade Raid, what's going on? Gorilla Gang members, how's it going? Here's what I'm gonna do. I am actually gonna have to jump back on that Zoom call so that Trey can jump on. Trey's gonna eat some food, and then we're going to jump on with Trey. Most likely, because you guys let me know. What did Trey say? Will I be doing an OnlyFans page just like Trey? Yes. But it's gonna be D&D. It's just gonna be me playing D&D. Alrighty. Trey is doing his OnlyFans right now. Uh-oh. He's going to eat fresh. Carl Johnson. Trey said he's going to making his OnlyFans right now. Very cool. Oh man, came from Matt's live stream. What's up? How's it going, Adam? Right now we're just idling by, and we are waiting for the Four HODLmen of the APE-Pocalypse. He just streamed for 7 hours. Yeah, I can imagine. Like if he's tired, he doesn't have to today. Ooh. Sweater stays on. Yes, the sweater must stay on for my OnlyFans. Do your DD and play D&D. Now that's a good idea. Did I ever play Frostgrave? Frostgrave. Is that a D&D? You mean Icewind Dale? Rime of the Frost Maiden? 4,000 of you. What's going on? Mad respect to those of you coming over from Matt's live stream, from Trey's live stream. Go ahead. We're just waiting around for them right now. They have the Zoom link. They can join whenever. Adam says, I've been jumping back and forth with you and Matt. It's pretty chill. How you doing, Andrew? I'm doing well, Adam. I'm doing well. I'm gonna confirm that Trey is actually doing his OnlyFans. Trey is building an OnlyFans right now. If you're too tired after 7 hours of streaming, it's all good. Otherwise, I sent a Zoom link. No rush. All right, no rush, guys. Let's see exactly where Trey might go. That background noise will be fixed eventually. It's because of how much it's because of how hot my laptop gets and how close it is to my mic. Oh, Grant Smith says he's making his OnlyFans free at 200k subs. Yo, that's a good deal. That's a really good deal. Matt's Duck Shirt OnlyFans, $9.99 a month, and that's a pretty good deal as well. Yes, charge only from the right side ports. Yeah, I've learned that from a long time ago. Still doesn't work. Such a weird thing, though. Such a weird problem. Roberto says, "Are you thinking of starting an OnlyFans?" Oh no, I've thought. No, I'm just joking. These are jokes. I have a very dry sense of humor. OnlyFans for Witching Day. So guys, if you guys have just joined because you're looking for some excellent technical analysis, well, the Four HODLmen of the APE-Pocalypse may or may not be on their way. One of the things that we want to notice is that there are technical levels of resistance and support that essentially has contained AMC and GME all day. For AMC, it was between $12.60 and $13.12. These are lines that I drew days ago, if not weeks ago, right? This is just old hat. AMC has been here, done that. We can predictably rely on how much AMC and GME is going to falter and grow. GME, on the other hand, fell directly through this brand new level of resistance and support between 205 and 179. It actually got higher to a new level of support and resistance at 219, and 205. So between 219 and 205, this is where the battlegrounds were all day. GME has ended the day above 200, which means that this is a great rebound play for GME, and we are looking pretty tight. August Yellowbird, I have had trays in my headphones at work today. Now switching to here, I'm holding because I have a myriad of health issues I need to pay for. Just wanted to say I appreciate you guys. August, we appreciate you. Please, ideally, the most important thing that we want to get out here is that we are mainly using this as a way of, one, saying a message, and two, making money. But if you have people you care about, especially yourself, that you are trying to bet on with this squeeze, we can only show you the technicals. We don't want you to be hurt in the end of the day, so please do take care. Please do take care. Ryan Joy says, I just bought 4K worth of options in AMC. Give me some hope. Hey, Ryan, you got a cool last name. Does that give you some hope? As a reminder, options are a form of, institutionalized gambling, and that's one of the things. Well, is stock markets just gambling overall, especially when it comes to these meme stocks? That's its own question. But at this point in time, be prepared to understand that gambling with options can easily get you up $1 million, like the God Pill, or down $600,000, like the God Pill. And we clipped his video just a couple of hours ago over on the channel. There is a gamble, people. Let's see. Archer says, I'm scared, TBH. Matt has members that were spreading fear, uncertainty, doubt last week during the dip and saying Roaring Kitty sold. Got banned when I called it out. Archer, you should not be scared. If you have followed Matt and me for the kind of DD that we have been covering since day one, you must know that nothing has changed yet. Right? Absolutely nothing. If there's a catalyst for people paper handing, it would make sense, but oftentimes all it takes is for the price to fall. If the price falls, that sometimes is all it takes for people to paper hand. That's why we always get scissors in the chat, guys. That's why we always get scissors in the chat here. These paper hands do not deserve to go with us to Valhalla, to the moon, and that is exactly why we are here, to give you guys reassurance and to give you guys research. Those are the two things, reassurance and research. That's actually a pretty good slogan right there. Have I seen that DD from Gafgarian? Yes, it is in the description down below. Its text is very small to read on stream, so go ahead and check it out yourself. People are just having a nice little conversation in the live chat. I appreciate that. Godpill blew up Trey's live stream today talking about his options. Wait, he came on the live stream? That's insane. Let's see. What is FUD? Fear, uncertainty, and doubt. Let's see now. How's Meatball? Just got to the stream. Thank you guys so much for caring about Meatball. Those of you who might not have heard the announcements, Meatball was at the vet yesterday. Just really quick to help you guys get up to speed. Meatball was at the vet yesterday. He is going through a routine checkup, and then we found that he might need surgery. We didn't want to chance it, so on Thursday he is going to get his surgery to remove a cyst that has too much melanin in it, or at the very least a suspicious amount of melanin, in order to make sure that there is no troubles whatsoever. However, this kind of fear was plaguing me all the way back when I adopted him when I was only a student on Clear the Shelters Day back in Chicago. So the main point is, you guys, people shouldn't have to be afraid of what kind of medical procedures your pet, your loved one needs. That's why I'm gonna do a charity live stream on Friday. That's the quadruple witching day. We're gonna have the Four HODLmen of the apocalypse. We're gonna have guest speakers and cool people come on, which is gonna be a roaring good time. And if you guys wanted to come support, even if you didn't have any money to super chat with, or even if you just wanted to say hi, all of that support is going to be really, really helpful. And we're going to be talking about the quad witching day all day on Friday. Okay, so, oh man, let's see. prediction for AMC on Friday. People are talking about this in terms of AMC. Now, remember, AMC's situation is actually a little bit different, right? We covered how Convergence is a way to be able to control the price of the stock even without shorting it, and even when it's on the SSR list. So that's why SSR list is starting to become a more and more non-player when it comes to deciding whether or not a stock is going to trend sideways or backwards or whatever it is. Jay Sun Kim for Meatball, and thanks for what you do. Thank you so much, Jay. I really do appreciate that. Let's see. So what was I saying? Oh yes, so AMC already had its earnings report come out last week. The Four HODLmen covered it over on Trey's channel, and we decided that it was overall a positive thing, right? The AMC Adam Aaron was moving all around. He had a positive Q&A. He is making it pretty clear that AMC is on the uprise. And then when the news came out about the LA theaters opening up this Friday, that was when things got huge. That's when things got pretty big, and then AMC jumped yesterday to $14. Now that said, we made great progress. We're definitely not even close to $13 before, and now we've dropped to 13. Honestly, that is the endowment effect talking, right? You think that AMC is suddenly down just because it went up to $14 from $11, up 25%, and you guys are getting worried. AMC is doing fine. It closed $1 lower than it closed the day before. Everyone take a quick chill pill. Okay. GameStop, feeling good. Open my top button. Look, if I open my top button, you guys are gonna have to subscribe to the OnlyFans. Just a joke. Oh, you make a meatball a wish list on Amazon, and that's a really good idea. You want a little wish list? You want to have some toys and stuff? I'll give you some bones. He loves to chew, so we can get him some plastic bones. That'll be very nice. In terms of GME though, so that's the other forecast of GME, is because GME's earnings report comes out next week. So when it does, and when the DTCC rules start to come into play, that is when we are starting to see a pattern here. Well, there's plausible deniability if GME squeezes next week. We could say that we, got in the game, and these friendly whales, the ones that are trying to, actually change the price, drop the price of GME by selling everything, liquidate all of their assets and every other stock as well, when we saw actual trends exactly the same in AMC, GME, and the other stocks. We know that this is a possible clue that some friendly whale, some long whale, decided to liquidate all of their GME and then decide to get a bunch of call options and long positions on the way back up, right? If they decide to trigger the squeeze, because once again, it's hedge fund versus hedge fund. It's Godzilla versus King Kong, actually. So Godzilla versus King Kong, the power relies in the fact that they know how the hedge fund's tricks are played. That's why it's very exciting to see that these long whales might just have some tricks up their sleeve to cause the squeeze next week. And then there's plausible deniability of why did the squeeze happen. It could be that the earnings report was just really good. It could be that these long whales manipulated the price. But overall, it's going to be harder and harder to tell, especially since, guess what? We are not going to be able to fully grasp exactly where does the stock squeeze start with the gamma squeeze, and exactly where this price of the stock is triggered based on margin calls for the short squeeze. All of that muddiness aside, all we know is, hey, we got tendies up in space, baby, that we gotta get and grab. Ray is gonna eat some food real quick. I got it. What's the Subway catchphrase? It's oh yeah, eat fresh. That's pretty funny. Callie Monk says, what exactly are we looking for during the congressional hearing? If you guys haven't seen the all-star roster for the congressional hearing yet, let's go take a look. We have some real big wigs in that roster. So game stopped. Who wins? Who loses? when short sellers, social media, and retail investors collide. What a fun title. So we're gonna have Mr. Sal Arnuk. This is gonna be happening tomorrow. I'll be streaming the entire thing, starting from when market opens all the way until 10 a.m. EST. This is gonna be 10 a.m. EST. It's gonna be 7 a.m. my time. So it's gonna be just an hour after I start streaming. We have Sal Arnuk. We got Michael Blaugrund. So Sal Arnuk is from Themis Trading LLC. Metal Dance 1. With all those short attacks, GME stock still at 200 is a good sign in their opinion. I'm hodling. Yeah, we expect a lot of shenanigans for a long time. And if the price of the stock is enough catalyst for these paper hands to get out of here and never join us on the moon, well, more power to you. More scissors in the chat, guys. Oh yeah, the only people who are making money on GME are guys like Bill Gross. If you guys did read that Bill Gross article, that is that is a rich guy that made money because he didn't like GME. He bet against it. Okay, so Sal Arnuk, he's from Themis Trading LLC. We got Michael Blaugrund. This is the COO of the New York Stock Exchange. I'm planning to hear him say a lot about regulations and about how the market works. Like, how does a market work? Well, when I was a young boy in Bulgaria, we got Dr. Vicky Bogan. She is a professor from Cornell University. Oh, hey, is Cornell like a university like Cornell? It is almost the same university because that's where Professor Meatball went when he went to school for data science. Alexis Goldstein is a senior policy analyst for the Americans for Financial Reform. And then we have Dennis Kelleher, which is the president, CEO, and co-founder of Better Markets. Alan Grujic is the CEO of All of Us Financial. And finally, we got Michael Piwowar, who is the executive director of the Milken Institute. So these guys are going to all go off. Now, one of the things is that usually they have their testimony written up ahead of time, but they don't right now. So I was gonna read over them. Oh, their testimony is here. So then let's read it. Preparing for tomorrow's testimony. So Trey did say that he's eating, and I think he's gonna jump on right after that. So let's give him some time. Let's be patient. So prep for congressional Congress hearing. There we go. Andrew, make a top 5 or top 10 list of what to expect from the hedgies. Oh yeah. Let's see. Okay, so let us open this up a little bit so that we can actually read it. Oh no. This is my good old GME board. I'm gonna mess it up. Do GME2. Green. There we go. So this is the testimony of Mr. Themis Trading. That's kind of confusing. That's Themis Trading, and then we have the New York Stock Exchange, Cornell University, and then Americans for Financial Reform, and then Alan, whatever the heck. This is COO of the New York Stock Exchange. All right, so let's give this a quick lookie. Let's see. So let me look at my face real quick. Hey you guys, today we are looking on the eve of the next congressional hearing. We already saw GME and as well as by proxy AMC get talked about in the House of Representatives in America. We also saw them get talked about in the Senate. We haven't seen a ton of progress. However, this time around it may just be different. We have the testimonies of these guys right here, and I want to make sure that we cover a couple of the highlights of these testimonies so that you can fully understand what to expect tomorrow. We will be live streaming all day tomorrow, and I want you guys to focus up because we have Michael Blaugrund, the COO of the New York Stock Exchange. So we're looking to see what kind of policy questions he's going to ask, as well as what kind of market questions he's going to expect it to be answering. We also have the Vicky L. Bogan. She is a professor at the University of Cornell, kind of like how Meatball is a professor at the University of And then we have a senior policy analyst. Hold on a second. This is Alexis Goldstein, who is an analyst in the Americans for Financial Reform. And then finally, we have Sal Arnook, who is the co-founder of Themis Trading, with his partner Joe Saluzzi. So there you go. We want to be able to focus up first on the COO of the New York Stock Exchange, and as we are waiting, we are checking around to see if Trades is going to join us in just a sec. So don't go anywhere and follow closely. So Chairwoman Waters, Ranking Member McHenry, blah blah blah. This is very much like Vlad's and Keith Gill and Mr. Plotkin. And Mr. Melvin's, Mr. Melvin is Mr. Plotkin, so Mr. Kenny G's testimonies a couple of weeks ago. This is Michael Blaugren, and they are the COO of the New York Stock Exchange. The New York Exchange is the world's largest exchange, NYSE-listed companies employing more than 43 million people worldwide. Okay, they have their purpose to help people, and then they play a central role in the capital markets. And that being said, now we get to the juicy part. The events of January 2021, where the first gamma squeeze for GME and AMC started, raised valid questions as to what, if anything, policymakers should seek to reform in the equity markets regulatory regime. The Securities and Exchange Commission, SEC, has announced that it will study these events as it has studied others in the past, and Acting Chair Lee has gone on record to recommend that the Commission will, prior to the completion of that study, lead with a regulatory action in a few areas, including, and here is the big kicker, what kind of regulations are they going to follow? We are looking at retail investor suitability, enhanced short selling disclosures, and a review of the relationship between payment for order flow practices and best execution obligations. Too fast or not too fast enough? Well, you know for a fact that these Congress people are not technical in finances or technology. If you guys remember from the last time we talked about what is a stock market, what is a short, what is a long position, we will follow with you shortly. Whatever conclusions the regulators reach about what ought or ought not to be done, a key principle must hold true, that public policy should build investor confidence in the markets. Could not agree more. If policy is not here to tell people what not to do, it's to tell people, hey, no matter what you do, the markets are going to keep you safe and keep your money safe, most importantly. So, investor confidence is built when individuals are armed with accurate information. Data is king about public companies, when infrastructure operates with stability and resiliency, when markets function according to predetermined rules, and when regulations are vigorously enforced. The SEC's study will inform policy development, but the NYSE believes at least 4 areas merit consideration for regulatory reform. Follow closely. These are the 4. First, modernizing shareholder disclosures, right? We got section 13F. If you guys have not yet heard about 13F, it is part of the Securities Act's amendments of 1975. And generally, it let's say, let's put it simply, luckily he does, investment managers with at least $100 million in equity exchanges holding must file quarterly reports on the Form 13F detailing their long positions in equities and listed options. Essentially, this is a 4 times a year, tell me what kind of positions do you have, you show me yours, I'll show you mine, and then everybody with purse strings and liabilities and risks in the game will be able to understand exactly what they're up against. These reports are due within 45 days of the end of the calendar quarter and are designed to provide the commission, issuers, and the investing public with information to make more informed decisions about how to regulate, engage with shareholders, and invest in public companies. Now that is kind of insanity, that they are due within 45 days. 45 days is already half a quarter. And I went to the University of Chicago, so we had a quarter system. Can you imagine if the final assignment was due next quarter, 5th week of the quarter after the quarter that you are currently in? Anyway, it seems a little loosey-goosey. At the NYSE, we sit at the nexus of issuers and investors, and both groups have strong feelings about 13F disclosures, right? So let's see exactly which one he is trying to push. He's trying to push for 13F disclosures, more vigorous 13F disclosures, or less rigorous 13F disclosures. Corporate issuers feel that current limited frequency and lengthy lag time is is preventing them from engaging productively and efficiently with their investor base. By contrast, institutional investors are concerned that more frequent or timely disclosures would erode the value of their fundamental research by allowing other investors to free ride off of their investment decisions, particularly if they have not yet fully established their intended position in a given security at the time of their 13F disclosure. So essentially, he's just trying to say both sides of the story right now. One side says if you have a quarter and a half to tell us exactly what you did last quarter, that sounds like a lot of time, a lot of lag time, and it's not going to make it very clear where everybody's positions are. Isn't the point of this rule to make it clear that everybody shows theirs and we know where everyone else's long positions are? In contrast, some people think, well, our positions are secret for a reason. We like to keep it hush hush because we have a specific strategic advantage. Otherwise, what's the free market doing here, right? It's just going to be too much disclosure, too much data around. And I say, you guys probably can guess what I think about this. I say that too much data is never a thing. We have facilitated joint discussions with representatives of both of these groups in hopes of identifying a constructive middle ground. Based on this dialogue, we believe the SEC should consider shortening the delay from 45 days after the quarter. So shortening the delay, who knows how much shorter, but they don't think half a quarter later makes any sense. Additionally, because issuers have a special interest in knowing who their owners are, the SEC should consider mechanisms to complement the public 13F filing process that enable direct disclosures to corporate issuers when a reportable position is established or fully divested. Potential information disparities could be addressed by leveraging blackout periods for corporate issuers when they choose to access the information. There you go. So right now, it seems like they want faster. Did Trey just message me? No, he did not. Thought he did. Essentially, they just want to get this information out faster, and otherwise they can see how both sides would want this one to be more rigorous in terms of reporting more frequently or more timely, and other side saying that if I report more timely, you guys are gonna know my secrets before I have an opportunity to make some money off of them, right? Kind of like the copyright idea. We copyright things because we want to make some money off of them before we die of old age, which is why the copyright length is a certain amount of time. Providing transparency for securities lending. So this is number 2, right? This is what Mr. COO of the New York Stock Exchange thinks. Short selling is an essential practice for liquidity, price discovery, and risk management. So they think that short selling is super duper important. Well, a couple of people that have been experts on the situation, like Renzel, think that, in an ideal world, short selling would not exist, and therefore this kind of situation would never happen again. The securities lending market on which it depends is opaque and inefficient. So he thinks that short selling is awesome, but unfortunately it doesn't show enough data to the people that want to see. Like, where are all these shorts? Why are some of them counterfeit? Why are some of those counterfeit shorts completely legal? These are the questions we're going to answer here. Indeed, research from the Department of Treasury's Office of Financial Research has identified the potential for systemic stability risks associated with securities lending. FINRA collects equity short position information from its members firms twice a month, and that's the FINRA report that we check out every single 2-week cycle. And that's why you guys are chilling with us whenever we go and look for the FINRA report. FINRA collects, so this aggregate data is insufficient for market participants or regulators to understand how supply and demand are changing for stock loans in an actionable fashion. Interesting. So they think that this is finally too little too late every time we have to wait for not only a delay, but also a delay on the daily, a delay on the reporting window, and finally a delay in the sense that we don't know how much of the short still remains to be covered. Why don't we know this? We're just guessing here, and that's maybe going to be a thing of the past in the future. So there you go. Okay. So by contrast, for decades, investors have benefited from the real-time reporting of trades and quotes for securities transactions on the consolidated tape for the equities market. The consolidated tape provides a simple, low-cost mechanism for investors and issuers to understand the prevailing market dynamics for securities trading. The SEC should consider establishing an analogous consolidated tape for securities lending. Excuse me. a system that provided for publishing the quantity, fees, and or rebates, duration, and other material terms for each stock loan without attribution would provide issuers, investors, and regulators the necessary data to better assess the risk and return of establishing a short position while protecting the identity and intellectual property of any individual market participant. As a minimum, stock loan information should be collected by the commission and considered for the public dissemination in the future. So right now, he's essentially saying we're not trying to break the system right now. We know that FINRA has been doing this twice a week thing, but we already have a vehicle that we can directly map onto this system, right? If we already do it for this completely separate thing, how about we try it with this thing? It's essentially saying here is a policy suggestion that already has a template, and we don't want to be able to rock the boat too hard, otherwise you'll never think about doing it. Section 984 of the Dodd-Frank Act provides a sensible framework for the SEC to tackle the issue of stock lending transparency. 984B of Dodd-Frank directed the SEC not later than 2 years from the date of enactment to promulgate rules that are designed to increase the transparency of information available to brokers, dealers, and investors with respect to the loan or borrowing of stocks. Let's say that this is just a bunch more mumble jumble to say, hey, we are trying to make it clear that people have rights to understand what this current situation is with these shorts, right? Otherwise, how does anybody know what everyone else is doing on a timely basis? Because we keep talking about the fundamentals of the short squeeze and the gamma squeeze. So that only works if people understand what the public call the option chain is for the gamma squeeze and how many shorts have yet to be covered for the short squeeze. This is very important to be able to hear it out of the NYSE COO's mouth that he wants more transparency as well. Eliminating competitive barriers for public investors. Almost done. 3 out of 4. Transparent public markets are critical to the success of the U.S. equity markets. Exchange quotations drive price discovery, and market participants bid at higher prices and offer to sell at lower prices when they have a reasonable expectation that their displayed price will attract a broad range of investors with different investment time horizons. Okay, pretty clear so far. Because it is typically uncorrelated with other asset prices and held for the long term, self-directed retail order flow represents one of the most sought-after classes of trading counterparty. Over the past year, retail flow has also been the fastest growing segment of the market. It is encouraging to see increase in broadening participation in investing, as public markets are a powerful mechanism for democratizing participation in economic growth and reducing economic inequality. Okay? The vast majority of self-directed retail order flow, however, never makes it to the public market. Instead, retail orders are typically routed to a broker-dealer wholesaler for internalization, a process that guarantees an execution to the retail customer in exchange for granting the wholesaler an opportunity to trade with the order before other market participants. Internalization is beneficial to the individual retail investor if the execution results in meaningful price improvement relative to the public market, which it often does. However, internalization deprives investors in the public markets the opportunity to interact with the orders, resulting in inaccessible liquidity for large institutional investors. So right now, we are essentially saying that there is too many middlemen along the way, right? Why is there this broker-dealer wholesaler in the middle? Is it supposed to be for the original reason, which is it helps the liquid of the market flow to greater and greater, or is it actually becoming little pieces of sand in the market instead, stopping the gears from turning properly? The problem with this right now is essentially saying that too few people actually have perfect, transparent access to the market. Right? Usually you guys have the process down to a T. Some of you who have just started investing right now with either Robinhood or WeBull or with a easy trade like on Fidelity or TD Ameritrade, those of you who have instant satisfaction of conducting a trade with a broker that charges you absolutely nothing, well, one of the things about that is it's still only a piece of the entire market that you can access, and sometimes you can't access at all. That said, if you're afraid that your broker is going to restrict your access again, I do recommend using the Link in the description down below to get yourself a WeBull app. This is the technical app that I'm using. I'm looking at the price of GameStop after hours and AMC as well on the exact same chart. A data scientist uses this specific app, and I recommend it for anyone else who is looking. Also, you get 2 free apps, which is also a small bonus. If you aren't planning on using WeBull at all, that's okay, because at the very least you have the opportunity to use it, and that is something that will be helpful if you've already funded it and the squeeze is happening and you don't know what to do. It helps that you aren't all in on one trader. Under today's regulatory framework, the proportion of trading on public exchanges is at an all-time low. In fact, at the end of the year, on some days, some more shares were executed in private, dark venues than on lit public exchanges with displayed price discovery. Let's see. Trading in securities with a higher level of retail participation may have 60 to 70% of their shares traded in the dark, just not enough transparency. Investors trading on public exchanges, including the NYSE, have a limited ability to compete for much of the retail volume executed by wholesalers. In large part, this is due to the difference in the regulatory framework for broker-dealers and exchanges. For example, why, before, you don't even have to give me an example, why exactly is it so easy for certain institutions and wholesalers to do things that retail investors can't? This doesn't seem like a fair and equitable market just because you think that there's some asynchronous rules. You think that a synthetic long or a synthetic short is a viable solution to change the market, essentially the access of the market to some and increase their access to others. In my opinion, that is pretty darn suspicious. For example, unlike exchanges, wholesalers can offer privately negotiated terms for price improvement or payment for order flow, choose to interact only with a curated set of market participants, and accommodate clients in cases where there may be a dispute. However, investors trading on exchanges are also on unequal footing. In a more straightforward way, off-exchange trading is permitted at price increments as small as 0.0001 cent, right? That's as 1/100th of a cent, while investors can only trade on the actual cent. So if you guys have noticed in your WeBull accounts, you have a volume analysis and time and sale analysis. You are able to know exactly when a bot is the one trading, right? Because they are going to be trading at a much lower and more granular level. So if regular retail investor is not able to trade, like for example, I'm not able to trade at a 0.0001 level, so therefore that can be an immediate tip-off of this price increment. NYSE research has recently demonstrated that 30% of market volume is artificially constrained by this penny-wide regulatory requirement. This results in an inefficient price discovery that makes it more difficult for public institutional investors to access the full liquidity of the market. Essentially, this is just being admitting that much of this market is rigged. Is that there's no way that these two people can find each other. The seller who wants a specific price increment as small as this, and someone who can only make a specific price increment as small as this, right? 30% of the market volume is artificially constrained. That's huge. The NYSE believes that it is time to harmonize on the on and off exchange price increment regimes. From a public policy perspective, if sub-penny trading is allowed in private dark trading, we believe similar conventions should also be allowed on public lit exchanges. Reducing the minimum pricing increment on exchanges in active low-price securities would lower investor trading costs, improve market transparency, and provide an increased opportunity for investors trading on exchanges to interact with retail orders. So, sub-penny trading. He no longer thinks that that makes any sense. And dark trading. This is just preventing normal investors like you and me from accessing the market, up to 30% being artificially constrained in this way. Finally, you guys are still with us. This is the final page. Accelerating trade settlement to T+1. This is huge. They've been talking about this for a long time. If you guys aren't aware, it doesn't take your stock the 5 seconds or maybe the 1 second you think it takes when the confetti on your Robinhood account goes, woo, you bought a stock. Actually, it takes T+2, at least 2 days from the initial purchase before they take money out of your account and then give you that stock. Why? I don't know. No, the actual answer is that they want to make sure that both parties have the whatever that they are trying to say. I have the money, you have the stock, but I want to make sure that you actually have that, and we'll take 2 days to actually clear it. That is unnecessary. And people have been talking about T+1 or even T+0 as an immediately settle these transaction like at the place of purchase, which is exactly how everything else is done. Why doesn't the stock market run the same way? Ask yourself these questions next time. However, right now it seems that the NYSE is supporting the growing consensus to accelerate industry settlement cycles from 2 days to 1 day after the trade. Though a shorter settlement cycle increases the potential for an operational error, the capital efficiency to be achieved by the industry is likely worth the risk. According to the DTCC, netting trades and payments for intraday activity reduces the value of payments needed to be exchanged by an average of 98% each day. Without intraday netting, massive capital inefficiency would reduce and inhibit the liquidity retail and institutional investors depend upon to buy or sell with immediacy. Future innovations, including any possible acceleration to real-time or T+0 settlement, should preserve the benefits of transaction netting currently enjoyed by the industry. So he's even talking about real-time or T+0. Like at that day, you're going to have to settle that transaction right away. So that is something that's very important to note, is that he is the COO of the New York Stock Exchange, and he's saying, yeah, this stuff can be in the future. Right now, we're just asking for a small thing. Just please change it from 2 days to 1 day. We only want 1 day, and the reason why is that when your clearing firm allows your broker, like Robinhood or WeBull, to buy stocks for you and your behalf, then that WeBull or Robinhood needs to put up a ton of money depending on the risk it takes to buy a stock. That's why when the clearing firm said to Robinhood that it's going to cost like a ridiculous amount of money to hedge the bet that maybe some of you don't have the money to buy that stock, Robinhood restricted buying, because only on buying is there collateral that Robinhood needs to put down for those clearing houses. We believe that free enterprise is the greatest force in history to improve the human condition. NYSE-listed companies are blah, blah, blah. Smarter regulation of today's equity market structure will improve investor confidence, encourage entrepreneurs to access the capital markets, and allow the U.S. to extend its leadership in the global markets. And that is the end of his 4-page testimony. You guys know that there's more testimony. I'm going to link those other ones here, such as the ones by Cornell University professor. There's 7 pages of that. We also have the 10-pager of this American for Financial Reforms, and finally we have the Themis Trading. This is another 9-pager, but there's pictures about gamification specifically. So once again, I ask you guys, does this sound like they are on the right path? Even the NYSE is advocating for very radical changes in small increments. They understand exactly where we need to go, and they're trying to make it clear that they're willing to go there. If you guys like this video, or you think that you wanted to be able to show off your own thoughts, I want you guys to see some comments down below, as well as hitting that like button so that more apes can find this video. So hope you guys have a really, really cool day. And now off to Trey. Off to Trey it is. So let's see if Trey is done eating his footlong. Humble Electrician says, I don't see why T+0 isn't possible. Yeah, we're not writing on notebooks anymore. It was about operational errors for a long time. Like, for example, like someone goes down and says, hey, I need you to buy 100 shares of GME. And someone's like, what? And then you're like, 100 shares of GME, quick. And then you write down and then you're like, okay, I'll be done in 2 days. All right, I need you to give me the money for that 100 shares and I'll give you the shares in 2 days. So T+2 made sense back then. Right? But now T+1, honestly, real time makes a ton of sense. Why, if billions, if not trillions of credit card transactions can happen at the exact same time, why can't stock exchanges happen at the exact same time? FJ Honey Badger says FTCV jumped 47% today, announcing taking eToro public. Crazy run up. I would like to follow up by asking you how it is again we can get WeBull. Oh yeah, how can we get WeBull? You just gotta get down in the description below, and you gotta press that quit Robinhood, join WeBull to get 2 free stocks in the description. It is the easiest way to be able to get this cool setup, and if you wanted to follow along with me, set it up exactly the same way that I do, and I'll show you a tutorial about how to do that. Ivan says, hey, what happened to at the congressional hearing? If you guys haven't seen that live stream already, the congressional hearings essentially, here, I talk about what I think as a congressman I should talk about, and then the 6 guys are like, hey, I'm a professional in X, Y, and Z field, and I think that I want to talk about this. Honestly, last time it was a lot more interesting because of Plotkins, because of Keith Gill, Roaring Kitty, because there was Vlad, right? The CEOs of like possibly guilty, right? Allegedly guilty parties in this GME saga. And now it just seems like the most interesting guy is the COO of the New York Stock Exchange. Everyone else is just an academic. So essentially they had people who might be guilty of crazy stuff talk, and they essentially answered none of these questions, and now they're going to have some academics come and talk, which might be less interesting, but at the very least it might reveal that the systems are changing. The systems are changing when the most important points that you should get away from this conversation. If you just started learning investing, prepare to learn something completely new. Citadel's trying to borrow $600 million. Yes, I know. They're trying to borrow it, and you can give Citadel free money right now with the promise that they'll pay you back. What if they go bankrupt? Then they don't have to pay you back. They're just trying to get some money to not go bankrupt right now, and it's kind of catch-22, right? If you give them money, but they're not enough, they're going to take your money, and they're going to just go bankrupt. But if you give them just enough money, if everybody gives them enough money, then they can avoid going bankrupt. Wouldn't that be amazing? It's kind of the person's dilemma for bonds specifically, because they need a specific amount of money in order to avoid a margin call. It's basically all or nothing. Are you guys aware about how your toilet works? It's called a greedy cup siphon, I believe, and it's all or nothing. When the water level goes to a certain level, it just goes all the way down. I think that's how toilets work. So that's why right now a margin call is all or nothing. When the price of GME or AMC gets to a certain level, it goes all the way down. Because that short squeeze is going to blow up everything. And one of the things I want you guys to remember is not only are we smashing that like button, we are trying to get me up to 60,000 subscribers. We're getting pretty close. I think we are just 2,000 subs away, and then I'm going to buy another $1,000 of GME, which is going to be pretty cool, in my opinion. Yeah, we are 57,000. Uh-oh. Well, anyway, it's 57,981. So let's get going, guys. So close. Gambate. Come on, guys. All right. E. Hernandez is just joining the stream. What's going on? We are waiting currently for Trey to finish his sandwich. If Trey is too busy today, I've been giving him opportunities to back out, but apparently he's not too busy today. He's just finishing a sandwich. So as of right now, let's look at some of these Robinhood examples. So let's see. Okay, cool. So this is from the testimony of Sal Arnuk. Gamification. This is essentially what they're trying to see, an undeniable conflict of interest here. This is kind of fun. It has pictures in it. Conclusion. The meme stock phenomenon in the markets today results in the dangerous intersection of poor investor education by some brokers and the PFOF practices that exist on and off stock exchanges. PFOF is payment for order flow, is a flawed and conflict-ridden practice. Can it be banned? That's for you to look into. Actually, let's look at payment for order flow and see if we can actually change, if I actually can focus on exactly what's going on here. So PFOF. Where do they define PFOF here? We're looking at the actual testimony of Sal Arnuk. He is going to be testifying in front of Congress tomorrow. People are talking about Vlad's hair. That's pretty funny. Okay, so conflicts of interest and form of order routing inducements refer to payment for order flow, or PFOF. So Robinhood does something very novel. They combine investing with social media experience targeted to young people, complete with trading addiction and a herding effect. Ooh, owning the Robinhood gamified setup here. They have amassed a user base whose orders tend to be small, and then as such they can create a unique effect. Small emotion-driven orders that tend to be predictable. Prior to starting Robinhood, the high-frequency trading platforms for the largest financial institutions in the world. What is on the PFOF? They recently changed their PFOF method from one giving them a set payment per share to one giving them a percentage of the spread instead. Think about this. A Robinhood trader wants the spread in the stocks she is trading to be as narrow as possible. HFT market makers buying those orders benefit most when that spread is as wide as possible. And now Robinhood benefits most when the spread is as wide as possible as well. Uh-oh, this is an amazing misalignment of interest. Okay, wait, hold on. It's kind of interesting. I'm learning along with you. I think this might be an interesting video by itself. Move your cursor slightly, says change for Adello, and then hit that like button. Support the APE-Pocalypse. I love that. Move your cursor slightly and then hit that like button. Awesome. Let's see. Let's see. Vegas chef Andrew is in the house. What's going on? Okay, so we have PFOF, payment for order flow. Robinhood has garnered $13 to $20 billion valuation with its largest revenue source being payment for order flow. So this is essentially form of order routing inducements. So that's how it's been making money. Essentially, they have data on you, and then they get paid because the small fluctuations in the market, the tiny delta that people are going to be able to estimate when they see that your order is going to go through, and you know T+2 days, people they're going to go a little nutso, right? There's that tiny little gap of time where if they see 1 million people buy a GME share on Robinhood, they can time the market and make a little bit of money on top of that. Atlantic Training, just sub, bro. What's going on, man? I appreciate that. PFOF presents an undeniable conflict of interest. When investors make a trade, they incur costs both explicit and implicit. PFOF may enable zero commissions, but while that explicit cost is zero, other larger implicit costs dwarf it. While PFOF is legal, we have long wondered how it possibly could be. How can a broker charge the duty of getting its clients the best available prices possibly do so by selling that clients' orders to amazingly sophisticated high-frequency trading firms, who in turn will make billions of dollars trading against these orders? Wow, this is really interesting. There's also pictures in here too. PFOF increases overall cost in the market for all investors, including pension funds. This is actually very exciting. Now I'm gonna look at pictures here. What is a stock option? So this is from Robinhood Learn. A stock options is like growing fruit. A stock option is like growing fruit. You hope the seeds turn into something that can be picked at harvest. If the fruit is inedible, you lose the cost of the seeds. If the fruit is ripe, you have the option to pull the fruit off the tree. Wow. Options are like fruit. Options are like fruit. Call options are like a grocery store coupon. They give you the right to buy a specific item for a certain price before the coupon expires. However, if you find the same item at another grocery store for cheaper, you probably won't use the coupon. That's not a bad analogy. A put option, buying a put option means that you have the right but are not required to sell a security at a specified price for a set time. They didn't even what happened to the coupon idea? They're like, call options are good, but put options lets you sell securities in a specified period of time. Oh my gosh. Wow. And Ameritrade as well. Options statistics. Options probability. Well, I'm officially, oh wow, look at that. People having fun. Look before you leap. These people, they're having too much fun gambling. Wow, okay, so I think this is gonna be a good video. Sal Arnuk. This is a pretty damning, damning thesis against Robinhood and all payment for order flows. So yeah, let's look at this. So payment for order flow, regulators know this. Okay, I'm going to try and make this as simple of a video as possible to follow. Vote with your feet, says Resort Dog. Zelda, the link. That's an old Bulgarian tale told by Robinhood. Yes, it's an old Bulgarian tale. Oh, free Ricky, that's funny. Okay, well, let's get going. How's it going, guys? We are... I got too excited about that fruit analogy again. How's it going, guys? Are you tired of pictureless testimonies? Would you like to see a testimony for the U.S. Congress with pictures? Yeah, sure you would. Today we are looking. Whoa, hold on a second. Today we are looking at the testimony of Sal Arnuk. He co-founded Themis Trading in 2002 with his partner Joe Saluzzi. Right, so he has pictures. He has a bunch of pictures of Robinhood options. Okay, I do actually want to start over here. Can't use WeBull in Sweden. Oh no, I'm sorry. Yeah, market is closed. That's why the price isn't moving. The price is right underneath. It's 206 right now, trading 9.9% lower, but it was 5.5% down on the day. Okay, let's try this one more time. How's it going, guys? Are you tired of boring old testimonies on congressional hearings? Like, where are all the pictures, am I right? Get out of here, Grandpa. Well, you are in luck. We are looking at Sal Arnuk's testimony right here. It has pictures. It has analogies of stock options with fruit and with coupons. And look at TD Ameritrade. We got people jumping into a pool. This is a pretty damning expose of payment for order flow and exactly why Robinhood, WeBull, and all these other brokers are free. It's because they need to take that tiny delta of you making your order on your app entirely free, by the way. It used to cost a couple of like $20+, maybe even cost hundreds of dollars to make an order because a broker needed to make a small commission on top of every single buy and sell. Now it's entirely free. Why is that, and why is that starting to destroy the markets and hurt the economy in an irrevocable way? This person is a co-founder of Themis Trading. His name is Sal Arnuk, and he is going to be testifying in front of the congressional hearing, which I am going to be live streaming with Professor Meatball tomorrow all day. So make sure you tune in and subscribe to the channel because it is going to be a doozy. Here is their thesis. Themis' thesis. They believe the most damaging elements of what has become a meme stock craze are playing out because of A, extremely poor investor education, and B, conflicts of interest in the form of order routing inducements, referred to as payment for order flow, PFOF, and a lack of accountability for poor investor education and misaligned incentives. At the end of the day, this is the biggest casino in the world, and if the incentives don't make sense, right, people are going to get hurt. And why is Robinhood incentivized poorly or even maliciously? Let's talk about, let's just go stroll way down here, boom, 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 and talk about the undeniable conflict of interest right here. When investors make a trade, they incur costs both explicit and implicit, right? You guys make a trade and you suddenly have to ride this casino all the way up or all the way down. That is the explicit cost, but there's an implicit cost too, something a little more devious and a little more dastardly. Payment for order flow may enable zero commissions, that's why it's free, but while that explicit cost is zero, other larger implicit costs dwarf it. Payment for order flow is legal, but we have long wondered why. Why is it legal at all? How can a broker charged with the duty of getting its clients the best available prices, which they are supposed to do, right? Get you the best prices to buy and sell the stock, possibly do so by selling your clients' orders information to amazingly sophisticated high-frequency trading firms, HFT firms, who in turn will make billions of dollars trading against these orders. Yes, they are trading against your orders by learning about your orders microseconds before you make them. While retail brokers and market-making firms claim that price improvement, PI, accrues to retail investor orders, such price improvement is a flawed calculation. Number one, it's based off of a slower price feed, the SIP. Number two, it does not take into account odd lots. Number three, the NBBO reference price it uses is largely set by the very same high-frequency trade market makers providing the PI in the off-exchange environment. There is just too much conflict of interest right here. They are incentivized basically in the exact same way as the people trading directly against you. Regulators know all of this. The SEC recently fined Citadel $22 million for mishandling retail orders. You know that that's probably one of the reasons why Citadel is looking for $600 million in bonds. They just started asking for handouts. Do you want to give Citadel free money after they keep doing these shenanigans? They also recently fined Robinhood $65 million, failing its best execution responsibilities. They know that the concept of PI is flawed. They approved a huge market structure change, which includes odd lots in the SIP, and protected them as a quote. Yet our industry sued the SEC to block this overhaul. PFOF increases overall costs in the market. Payment for order flow increases overall costs in the market for all investors, including pension funds. It makes it more expensive for all of us to be in this market. Back in 2012, we wrote a book called Broken Markets. Oh, it's a big plug for their book right here, in which they asserted that for a true price discovery to take place, exchange limit order books need diverse players in them. Does it sound like what we just described, the relationship between the high frequency trading and Robinhood and these other brokers? Does that sound like they are actually diverse? Does it sound like they are actually aligned in the same direction, or malaligned together in bad incentives? Thank you, DW. Let's give WeBull a treat, actually. So, a little treat break, and now right back into the text. The pictures are coming in a second, don't worry. When a few HFT market makers buy up orders that account for as much as a third of the volume, orders that tend to be less informed, uncorrelated, and benign, like the regular retail investors that buy and sell trades. They're not trying to hurt a stock. They're just saying, hey, I think I like Tesla. Boop, boop, boop. I just bought some Tesla. They're not trying to short the stock. They're not trying to do call and put options against it, trying to hurt the stock in any way. They're just trying to buy and learn, just like you guys. You're educating yourselves. Hitting that subscribe button is the best way to start educating yourselves right away. What is left on those exchanges is that much more toxic and costly to trade with. Market impact costs are higher and spreads are wider as well. Two studies that confirm this are the Babelfish study of transaction costs in meme stocks and additional academic study that amazingly points out that when Robinhood experiences technology outages, spreads in the general market become narrower. Wider spreads mean that the retail investors receive worse prices, even after accounting for PI, and all other investors see their costs increase as well. You see that this is starting to double down on the idea that this is bad for everyone, not just some. Okay, PFOF. Payment for order flow practice provides a disincentive for displayed limit orders on exchanges. These displayed orders are often stepped in front of by HFT market makers who piggyback the price set by them. Those market makers step in and are rewarded with a sale that was only made possible by the displayed order, which narrowed the spread. Would any of you, when buying a home, for example, put a sign out front of said home with the price you would pay only to help someone else buy the house ahead of you for the same price or $1 more? Yet this is exactly what happens to displayed prices in the market every day. That's a fantastic analogy, by the way. You guys are essentially saying, hey, here's the price that I would buy for this stock when you buy a stock on Robinhood. That tells the entire market your willingness to pay right away. And that is the millisecond difference that PFOF takes away from you. PFOF also takes the form of a maker-taker on exchanges. This practice creates race conditions to be first in line to get a rebate every time a quote changes in the marketplace. These race conditions are the goal of the exchanges. After all, they sell the tool and speed needed to compete in them. The races are not so good for everyone else as they encourage high costs, games, and complexity. It should surprise no one that investor orders do not dominate these races. HFT market makers do. Investors' orders typically find themselves further back in the queue. As a result, investors miss opportunities at buying cheaper stock, and when they do get filled, they are subject to outsized adverse selection. Despite this, brokers representing investors still route largely to these exchanges for that rebate. So once again, they are essentially making too many roles in this game where we need a diverse selection of people to actually make sense of this crazy market. Regulators know this behavior is conflicted and distorted. In December 2018, the SEC adopted a transaction fee pilot whose purpose was to test the effect of rebates on market quality. Sadly, the exchanges sued and succeeded in blocking the pilot. What were the exchanges afraid? That the pilot would confirm. Finally, maker-taker on exchanges has dramatically increased fixed trading costs to trade on the exchanges. This has resulted in less diverse public markets, which is especially undesirable from a price discovery perspective. Which of the following markets would have made a better price discovery? A, one where the prices are determined by an oligopoly of four large high-frequency trading firms. Does that sound like an oligopoly? Does that sound like something that would be fair and equitable? Or two, one where the prices are determined by diverse participants, retail, institutional, A or B players, as well as numerous HFT trading firms. We're not saying that they can't exist. We're just saying that they shouldn't exist. They shouldn't be the only ones that are making the plays, right? They shouldn't be the only ones there. The reason why I'm scrolling back up is because I do want to be able to read this section before the conclusion, right? Here are the pictures, like I promised. Investor trader education. This is where all the pictures are coming from. When people are being educated by the stonks, it ends up being a little bit childish, a little bit infantile, and a little bit dangerous. Investor trader education. Robinhood does something very novel. They combine investing and trading tools with the social media experience targeted to young people, youthful people, complete with trading addiction and a herding effect. They have amassed a user base whose orders tend to be small. For example, Robinhood's average account size is about $5,000 compared to TD Ameritrade's, which is $110,000. Let's get some scissors in the chat if you have less than $5,000 in your Robinhood account. Of course, all of you should have quit Robinhood already. And let's get some stones or rocks in the chat if you guys have more than $110,000 in your TD Ameritrade apps. As such, they have created a unique product, small emotion-driven orders that tend to be predictable, which they can then sell to their real customers, HFT market-making firms, at a premium. If you think this claim is bombastic, consider that one. Prior to starting Robinhood, the founders developed HFT platforms for the largest financial institutions in the world. Two, they recently changed their PFOF method from one giving them a set payment per share to one giving them a percentage of the spread instead. Now they're directly incentivized to make that spread. A Robinhood trader, you essentially, someone who, like Courtney Vickery, who just joined as a special infantry operations group of the Mo Monkey Army, you are trying to get the best price possible, the lowest spread possible. But now, though Robinhood benefits most when the spread is as wide as possible as well. This is an amazing misalignment of interest. They want to give you a bad price. Robinhood turned down market maker offers of PI for its app users, opting for a larger payment for its own bottom line instead. And Robinhood has garnered $13 to $20 billion of valuation, with its largest revenue source being payment for order flow, which means that its founders' personal wealth is derived from customer trading and more PFOF, even if the trading is potentially not in the best interest of its customers. They make almost all their money directly from giving you guys not a great price. That's a really important note. This tells you that Robinhood knows full well the value of its herd and gamified product base. They knew to educate their users just enough to incentivize trading and maximize their own revenue as a result of it. We have included exhibits B and C as examples of options trading education from Robinhood and TD Ameritrade for you to compare, draw your own conclusions. The incentive that has enabled their model is none other than payment for order flow. Once again, paying a company money, the high-frequency trading company's money, so that they can use your data. So let's look at Robinhood and see finally the pretty pictures of what this hilarious analogy is. Hey, this is February 23rd. This was just a couple weeks ago. This is way after the January squeeze, by the way. Okay, hold on. This fruit is getting too big. Robinhood learned. What is a stock option? Stock options are like growing fruit. It's an old Bulgarian tale, says Free Ricky before. You hope the seeds turn into something that can be picked at harvest. If the fruit is inevitable, you lose the cost of the seeds. If the fruit is ripe, you have the option to pull the fruit off the tree. Oh, sweet. Trey says, want to go live in like an hour and a half or so. So therefore, I guess I'll be back in an hour and a half after this video. So what does this mean? Well, essentially, this is trying to say, I'm gonna say yes to Trey. This is trying to say that the premium you pay is the seed cost, even though it's $100 per option. Sorry, it's 100 times that premium per option. So it's a lot of seed that you could lose if the fruit is inevitable. So that is that's pretty messed up. That's pretty messed up. It's just making it seem like a little game here. And then we have over here, what is a call option? For sale ASAP. This doesn't even look like a coupon. This is a bunch of boats. So we have call options are like a grocery store coupon. They give you the right to buy a specific item for a certain price before the coupon expires. However, if you find the same item at another grocery store for cheaper, you probably won't use the coupon. Call options are just coupons. Call options are like grocery store coupons. This was March 11th, 2021. Someone just wrote this and is making it seem like one of the most risky bets in the entire market is just buying a coupon. And finally, what is a put option? Well, buying a put option means you have the right but not required to sell the security at a specified price for a set time. Seems like one of these March 11th. Remember, these are both updated the same day. Seems like Robinhood wants you to do one of these a lot more than the other one. This one is literally just the technical definition. This one is about a coupon. What the heck? Now let's compare this to Exhibit C, TD Ameritrade samples. Okay, so now this is TD Ameritrade option statistics. Refine your option strategy with our option statistics tool. Look at the put-call ratio to identify the potential direction of the underlying security, assess the IV percent to determine a buying or selling strategy, and use our sizzle index to help identify if option activity is unusually high or low. Yes, very, very technical, possibly restrictively so. This basically means unless you actually understand what call options are, you're not likely to actually go out and buy one. And now let's look at option probabilities. Weigh the potential risk of your trade against the potential reward using our option probabilities tool built right in the option chain. Making it clear that there's a lot of technical analysis that goes into an options trade. And then finally, people having fun. Oh, people having fun right here. Options trading basics. You're in tune with the basics of trading, so you're wondering if options might be right for you. Want to learn about trade options? Start here. Look before you leap into options contracts. Know your contract specs. To be fair, this still makes options seem too fun. This is still too fun. I would say TD Ameritrade is making this seem like it's a fun little endeavor and not just very dangerous charts that can make you lose a lot of money. So what is the point of this pretty damning, once again, I usually say darning, but this is damning, guys. This is trying to prove something for Robinhood and every other company that relies on PFOF, payment for order flow. The meme stock phenomenon in the markets today results from the dangerous intersection of poor investor education by some brokers and payment for order flow practices that exist on and off stock exchanges. These practices create a massive incentive for such brokers to sell their client orders and to sophisticated trading firms uniquely tooled to profit off of them. This is a needless conflict that can harm retail investors and it degrades the integrity of the market ecosystem as a whole. PFOF is a flawed and conflict-ridden practice. Can it be banned? That's for you to look into. However, as a minimum, we believe the SEC's transaction fee pilot should be reinstituted and that it should include all market centers, including exchanges, ATSs, and non-ATSs. This pilot would be an elegant way to test the effects of these conflicts of interest on a market quality as a whole for all investors. So, I promise you guys pretty pictures. Hopefully you got what you were looking for. Does this make sense? Can we take away one of the only ways that Robinhood makes a buttload of money and still assume that the brokers are going to be free in the future? Can Robinhood still sustain the fact that, you know, if we take away PFOF, one of the only ways that they are misaligned with our incentives, but at the very least they're making lots of money and making it free for us to purchase, can we do that? And what are the other downhill repercussions? If you guys believe that this is the only way to go, just like this this analyst here believes that this is the best way to make the entire market more free and equitable, then you should go down in the comment section below and tell me what you think. Go ahead and hit that like button to learn a little bit more about the stock market by showing this to the apes out there who want to learn and grow just like you. And once again, remember, always do your own research. I'm here to make it your very first step in learning about the markets, the up-to-date information, the news that you need, but it is not everything that you have, or even partially enough to make financial decisions. I'm not a financial advisor, but I will see you in the live stream tomorrow. And for now, not for forever. Hope you have a nice day. Peace. Okay, I'm actually gonna wrap up now. I am gonna wrap up now because it seems like Trey wants to go live in an hour and a half. I'm not sure which channel we're gonna be live on, so stay tuned. So stay tuned. But YZZZZZ7Z says, if I switch to WeBull, will I be stuck in a limbo during the squeeze? I don't recommend switching to WeBull. I recommend opening a WeBull account, using the link in the description down below, and then you have WeBull. Then you have WeBull just in case you need to use WeBull if Robinhood or TD Ameritrade or Fidelity locks you out during either a server outage or perhaps a clearinghouse scenario happens again. If you have all your money in Robinhood, that's fine, right? We've been telling you to dump it, but honestly, we don't want to give you too much grief. Just know that they are likely going to pull the same tricks that they did last time. So at the very least, open up a WeBull and fund it so that you have the ability to buy more GameStop or buy more AMC if you want that option. For now, but not for forever, I will see you literally in an hour or an hour and a half whenever Trey is ready to go live. Okay? I hope you guys have an amazing day. I wanted to show you guys some of the credits for the people that make this show possible. Moon Platoon over there, Space Legend over here, and the Gorillionaire right up there. And I now want you guys to have an excellent day. Have fun. Meatball loves you. I love you guys. Peace.